guys, this is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. This time I'll provide an update for Valuetronics Holdings Limited with the stock symbol BN2. I have discussed this company's profile on my previous video around 8 months ago, so I would advise you to visit that video for a lengthier discussion on the company's profile before watching the next part of the current video. But if you're all caught up, let's watch the current video. Okay, for those you are the busy ones, let me summarize my analysis for today. The first one is that the company's profitability had gone down quite significantly, which majority impacted by the component shortage. The company's finance seems to remain quite healthy, that dividend payout seems to be reasonable, though it's still quite high. The market react quite negatively about this news, the profitability news, that valuation dropped significantly. Though the share price seems to be quite stable, it is suspended by the company's share buyback. Okay, how did I reach the above analysis? Follow my video as I quickly discuss the company's profile, EPS since 2008, dividend and other numbers. If you find this content to be informative and interesting, please consider to support by clicking the subscribe and like button. Appreciate your input and comment to improve this channel. Other than that, this channel can also be accessed through podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Okay, before getting into the data, as usual, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my journey learning and practicing investing from scratch. Over the time, I made some changes with the intention to keep improving this channel. Still, this video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video and analysis could be useful somehow. Send in your comment and input in the comment section down below. Now let's start with a very short background of the company. Established in 1992 as Honor Tone Limited, it headquartered in Hong Kong with facilities in Dan Shui Town, Huyang District, Guangdong Province, PRC near Hong Kong. The company was started as an electronics manufacturing services, or EMS in short, or those companies that make products for other companies. The company, this current company, became a holding company in 2006 with incorporation of Valuetronics Holdings Limited. Okay, so the name started from 2006. Valuetronics was listed on SGX main board in 2007. In 2019, it started expanding the manufacturing facilities to Vietnam as a response to US-China trade war. Last year, Vietnam started its operations. The facility in Vietnam started its operation. Okay, so that's a quick company's background in its facilities. Now let's take a look at the company's performance. As I mentioned below, if you are keen to know a lengthier discussion of the company's profile, feel free to go to my previous video because I talk more about the company's situation and history and also the stakeholders in the previous video. Okay, now let's start with the company's performance. First, in terms of profitability, here I plotted the annualized earning per share. I also added the green dashed line as a zero level. Earning below this line indicates that the company is recording a loss for that particular year. We can see that Valuetronics earning per share have been declining for the last 2 years. From their second quarter 2022 press release, the company have been affected severely by shortage in certain electronics components. The shortage in turn affected the company's ability to meet the customer's order. which ultimately affect the company's profitability. In my previous analysis on Valuetronics, I mentioned how the company survived the challenges in 2009 and 2016, as well as a restructuring that happened in 2013. So, we do hope that they will survive the current challenge. In November 2021, the second quarter of 2022, the company reported EPS of 13 cents Hong Kong dollar. Okay, other than that, in my previous analysis on Valuetronics, I also mentioned about the company's financial prudence. It stocked a substantial amount of cash. Okay, for now, as an update, let's revisit Valuetronics cash versus liabilities. Now, in terms of cash position, on the screen we can see the cash position up to the fourth quarter of 2021. The cash position currently, back then was at 1.1 billion Hong Kong dollar. Yep. But looking at the first half of 2022, there seems to be a drop slightly from about 1.1 billion Hong Kong dollar to currently about 936 million Hong Kong dollar. This bank stash contributed to about 7.4 million interest per half a year. In terms of current liability, there's a slight increase from the fourth quarter of 2021 to the second quarter of 2022. But the numbers doesn't seem to change that much. Most of the current liability consists of trade payable, accruals, contract liability, and current income tax. The company still holds 0 bank borrowings. Based on the current results, the company is still paying 4 cents Hong Kong dollar of dividend, which was paid in 3rd December 2021. Okay, in terms of dividend, it seems pretty okay considering the company's current cash stash, liabilities, and 13 cents of Hong Kong dollar EPS. So it's still lower than its EPS. Noting that the current dividend yields is about 6 to 7%, which is still very good. It is at least higher than CPF interest rate. That was for the company's finance. Now let's take a look at the market valuation. As usual, I plot 4 layers of information. They are the share price, overlaid with then earning multiply in green dashed line, the 15 earnings multiply in yellow dashed line, and finally the 20 times earning multiply in red dashed line. So over the last 12 years, Valuetronics has been always an undervalued company. By undervalued, it means that the share price always below the 10 times earning multiply. Now for the first time in 12 years, the share price is above 10 earning multiply. As a result of the market seems to be adjusting their valuation towards that. The share price decreased from 65 cents till early 2021 to 51 cents just a couple days ago. The share price also seems to be held afloat by company share buyback action. Valuetronics have been buying share from the market since 28th of February 2022. It bought around 150,000 shares a day. As for the making of this video, it had bought around 3.8 million shares and will be kept as treasury share. The amount it have bought is currently around 8.7% of its allowed to purchase. That is around 43.5 million shares. So in that respect, they're probably going to buy some more. Keep buying some more, yeah? Personally, I'm not that fan of share buyback. The negative impact for me is what I can think of now is that there's going to be less chance that the price will go down deep enough in the near future. Alright, those who have followed this channel or have seen my previous videos would know that my reasonable price is usually around 10 times earning multiply, which is currently at $0.5 or 50 cents. As the making of this video on the 1st of April 2022, Valuetronics share price is at 54 cents per share, which is quite close to its reasonable price, though it's still higher. Yeah. It is the highest price to earning ratio so far since 2010. So for now, I'm laying low, so not adding more on my position on Valuetronics, pending on two things. The first one is the full year result, which based on last year's schedule probably will come this month or next month. And then I'm also pending or waiting for the end of the company's buyback activity or buyback period, which seems to be still quite long. Okay, now wrap up. Conclusion. After looking at the numbers and other qualitative insights, I can say that the first one is that the company's profitability had gone down significantly, which majority impacted by component shortage. 2, the company finance seems to remain healthy. That dividend payout seems to be reasonable. The market seems to react quite negatively about this news, the profitability news, that valuation dropped quite significantly. The share price seems to be suspended by the company's share buyback. Yeah. So I'll keep this company in view, waiting for its profitability to get better and perhaps also waiting for the end of its share buyback activity. The dividend yield is still good though. If you watch my previous video on my family's investing journey and strategy, 6% investment yield per annum on average will sort of guarantee me and my husband to retire in 6 years. So this company seems to be still interesting for me from its dividend yields. Yeah. Right, if you find this content to be informative or interesting, please consider to support by clicking the subscribe and like button. Also appreciate your input to improve this channel through the comment section. Please write your comment in the comment section. You can also access this channel in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is same, Mami Beluga Investing. Thanks for watching, and I'll see you again in my next video.